Is there 3 hours? Is there
People
4
overdo
hours?
it, don't they? Yeah, buy,
There
rent,
doesn't need to be
refinance,
any more hours
rent,
than 2.
repeat, yeah, rinse.
I've got to go and find out where they got their money from. Yes, because if they've done it through some drug deal in Colombia, you're going to jail,
Yeah.
pal.
Yeah.
The word skin in the game, right? When I was like, I'd be like, oh, this has been difficult now, but I get it.
We're the extra set of eyes to go, that doesn't work.
But it looks very complicated, or it looks very like borderline dodgy. I will tag him in or someone. I'll tag my broker friends in, not be like, these guys can definitely help you.
You brokers are money grabbing sharks. You get paid commission from the lender. Why do you charge a broker fee as well?
Yeah, we are 100%. We are horrible human beings.
It goes into my donut kitty. I love donuts. I need to charge broker fees to people.
If you have that mentality that anyone that's offering you a service doesn't deserve to be paid for that service, that person's going to be a very, very...
Welcome back to the Property Newbies podcast. Today's episode, I'm joined by two of the most active, well-known brokers in social media, Mr. Sam Norris and Mr. Shaz Ahmed. Today, we're going to be talking about all things finance related. So if you're just starting out in property, this is one not to be missed. So Shaz, Sam, welcome to the podcast. Thank you very much for coming on. How are you both?
I'm amazing, Courtney. Thanks for having me. Thanks for making this happen.
Yeah, I feel like shit, but thanks, yeah.
You don't look like it, but...
Thank you,
Yeah.
darling. I'm so lucky that we're doing this today because I couldn't speak yesterday. Internally, I'm dying. Yeah,
Really?
But apart
What
from
happened?
that, just ill, mate. Just been ill this week.
Yeah.
Cough, cold, all that sort of stuff.
Do you get ill often, or is it when you get ill, you just get ill?
Do you know what? I never used to, but I've started to a bit more. I need to look after
Old age.
myself.
Old age, yeah.
As
gonna
you
be-
get older,
gonna be
We're all
four-
in the same age
gonna-
bracket.
gonna be-
Yeah.
I'm going to be 40
Yeah.
this year, man.
as you get older, you actually have to start looking
Yeah,
after
yeah.
yourself. You can't just
I
be
know.
like natural fitness and health anymore. You actually got to
Or
make an effort.
as you get to a certain age, you need to stop letting your mum look after you. That's what
there's-
I've started
there's
doing.
that
So,
too.
then I employed her as my PA.
Yeah. But like I said, yeah, thanks for coming on. This has obviously never ever happened before. You both in the same room in the same podcast. So I suppose I'm quite honoured.
As I said before, I wouldn't do it for anyone, mate. You know, takes a lot for me to have to sit next to this guy.
And I haven't even paid you to get here either.
First and last time.
You're not.
This water.
Oh, hang on.
Just the water. That's your payment right there.
I'm alright with that.
Yeah. But today, my objective for today really is to be like a kind of a masterclass in property finance for people just starting out. You know, I was in the position of starting out 2.5 years ago, and it was a bit of a minefield, property finance, all the jargon out there. So yeah, I just really want to make this a masterclass for anyone who will stumble across this, just starting out, looking to start out. But even for the people that are already actively investing as well, you know, I'm hoping they'll get something from today as well. So yeah, that's the objective for today. But before we start, something I always like to ask the guests before we get into the actual podcast is to introduce yourself, but also tell us something quirky about yourselves which maybe no one else knows about.
You got one ready?
Listen, I'm always ready to introduce myself.
Go for
My
it.
favorite topic is me, right?
Go for it.
Hi guys, I'm Shaz, mortgage broker, director of a company called Elan Property Finance. We work with investors, all that cool stuff. I'm quite passionate about people not making expensive mistakes, so my duty is to stop you doing that. Something quirky, you know this. I used to own a gourmet burger restaurant many years ago. This is why I've not had a burger in a while, because I kind of went off it. But yeah, I used to flip burgers for a living.
So you're a bit of a burger connoisseur then? Is that why you
I'm
don't go for burgers anymore?
I'm an multi-award winning burger restaurateur.
Wow. I actually
We
didn't
won
know
2
that.
awards. That counts
Yeah.
as multi.
I 100% it does.
Like, yeah.
But you should be shouting about that more.
That should go on my Instagram somehow. and just-
Award winning,
Multi.
and then just put a dot afterwards, and then broke.
And
That should be in your Instagram profile, surely, right?
Yeah, or LinkedIn, because people do LinkedIn.
Or
all the
LinkedIn,
time.
yeah.
Multi-award winning business owner. There you go.
Yeah, I like
Yeah.
it.
And Sam?
So yeah, I'm Sam Norris. I run a company called Grand Union Finance. Been going for nearly 4 years now. Very similar to what Shaz does in terms of very much focusing in on the investor side of the market. Although we have seemed to carve out a really nice niche at the moment for residential mortgages for property investors. That's the only residential mortgages we tend to do. In a very similar way to Shaz, you know, we're all about, you know, making sure we're looking after the clients. I say to our clients that we're very much their success partner. It just so happens that the way that we're going to help them be successful is by advising them on the finance side. Building the team out, got a couple of brokers, a couple of back office staff, operations manager and everything, so we're growing that out, and very, very passionate about improving the finance market as well.
Yeah.
I go on record quite a lot saying I don't really like a lot of brokers in our industry. Shaz is not one of those, I must have to say. But Shaz will probably agree with me that our industry doesn't necessarily have the best rep. So I think that's also a bit of a life mission for me. Quirky. Oh God, I don't know. I always struggle with this. My life ambition is to buy Saracens Rugby Club.
Okay.
Yeah, that's probably the quirkiest thing about me right now.
Yep. You're a big rugby fan, yeah?
Massive, yeah. No one wants to sit next to me at a Saracens game. I'm an absolute.
Are you that guy that's just screaming and just?
It's embarrassing. I embarrass myself. I say things. I shout things, and I go, "Oh,
You know you're embarrassing when you actually embarrass yourself, right?
oh God!"
You have that self-awareness.
Yeah.
To, like,
Oh, it's horrible. But it's just when you just have like such a passion for something that you just can't help it, and that's
maybe you
that
should get
is
a box, a Grand Union box, and that could be the first step to ownership.
That's on the it's part of the plan.
I know.
It's part.
I'm
of the plan.
listen. I can foresee a lot of these things. It's fine.
Mate,
Is it on the mood board? Yeah.
Yeah,
The wish list.
my first thing was it's I'm doing the Steve Hamilton thing. I'll get the box. I've already met the CEO.
Yeah.
Brand
Like,
everything. So
yeah, I'm getting in there,
booth.
getting in
Yeah,
there.
love it, love it.
So we'll get there one day. And do you know what? If I don't, it's not something that's going to kill me, but it's something I'd like to do.
Yeah.
So
Love that. So before we get started into the actual main part of this, then, so what have you guys done before property? Then, have you always been in finance and brokerage, or what's your background before this?
So my first proper job when I came out of university was working for a finance research company. Just I stumbled on it. I did history, and I noticed that all the people that had all the money were the brokers on the other side. I was on the cheap side, and they were on the we've got flash suits side. And then in terms of my first job in property, off the back of that, I got headhunted. I didn't. Just cold called by
Cold outreach.
yeah, and it was cold outreach, and it was somebody recruiting for Foxton's estate agents.
Yeah.
And they told me it was a trainee broker job, so I turned up. I had done loads of research on the stock market, and turned up, realised it was a group interview.
I've done
I was the youngest person there by about 10 years, and when they started showing this video about property and mortgages, I was like, what? And amazingly, because I seemed to be able to just wing things, I was the only person there to get the job. So that was at Foxton's.
Wow.
And I started my training there, and that's how I kind of kicked off. That was 2007.
You've kind of almost been in the related sort of field then.
Yeah, pretty much since day dot. Yeah.
Jazz?
Love that. So my first job was selling windows on the phone, calling people, selling windows. So that was sales, I guess. And then I went to a couple of call centers. So tech support at Virgin Media, Lloyd's Bank, and my first mortgage job was with Barclays.
Yeah.
That was like residential mortgages, called like a contact center, not a call center, contact center. They made us redundant, and that's when my life changed. And then that's when I went to specialist finance.
Yeah.
It's been about 7 years now.
Did you know you always wanted to get into finance of some sort of property?
No, does anyone? No, I think
no one stands up at school when they say, "What do you want to be?" when I really want to be a mortgage broker.
Yeah,
It's my dream.
My career advisor didn't really suggest that as a career option.
Yeah.
I think I'm just really passionate about helping people. For me.
Yeah.
So, but it's selfish. So if I help someone and then they say thanks, you're amazing, that makes me feel good. So do more of it. You know what I mean? I think that's for me.
That's a thing from Friends, isn't it? Where they say there's no such thing as a selfish act.
Yeah, a selfless act, and it's Ross, isn't it?
Yeah, they're like, but that made you feel good. Oh, damn it!
Yeah, so I'm hoping that the fact that people, on social media or emails, thanks, you've done this good. That makes me feel amazing. So why not do more of that?
Yeah.
There's no better.
And I'm qualified.
It's that mutuality as well, isn't it?
Yeah.
Yeah.
So I'm not super passionate about finance in that sense. I am now because I'm in it.
Yeah.
But it's more about just helping people and solving their problems.
Yeah. One thing I find interesting so I've been in the property industry now, I'd say professionally doing it, taking it seriously for about 2-3 years. And if I compare that to my outside life in terms of my day job, it doesn't seem to be like an element of competition in property. Everyone just seems very, like you said, they're helpful and friendly. Is it the same with brokers? Like, do you not see yourself as necessarily competition, or
I think
I don't get that.
Look,
that impression.
The way I look at it, there's enough to go around. And there's enough. There is enough. It's abundance, isn't it? There's enough clients, enough deals, enough property deals to go around. I think some brokers are a little bit like that, where they maybe don't want to speak to other brokers just because it might steal my business, or why you hang around with my client or things like that. I have seen that happen.
Yeah.
But ultimately, I don't. I hang around people I like to hang around with, so I'm not in those spaces where there's ego.
Yeah. Do you know, I agree. I think it's a bit split. I think there is an old school mentality where it's very salesy because obviously we both come from that sort of background, and it is a bit dog eat dog. But Do you know what I use Shaz as an example all the time, where I'll say like, it's that like Borg McEnroe type thing where the one became better because of the other, and I see him posting something, and I don't go wanker. That's good. He's going to nick loads of business. I think that's a good bit of content. I better up my game.
Yeah.
And the fact that he's really good at what he does keeps me on my toes.
Yeah.
And it might be the same. There
And
are
vice
a
versa,
few
right?
other brokers in the industry that do that as well. So I think I think it's just a human mentality thing.
Yeah.
If you're like we are, where we see that as inspirational rather than competition,
Yeah.
then you're always going to be better. If you see it as competition, it just leads to resentment, and ultimately that's a personality trait. That's not to do with brokers or whatever. you know?
No, you're absolutely right. But even to the extent where I've seen you both share each other's,
Why not?
content.
Well, listen,
I'm
sometimes
just like, in my actual day job industry, you'd never get that.
Because-
Imagine another salesperson saying, "Here you go, salesperson. Here's a lead, or here's this."
you know what it
wouldn't
is.
Get that.
I do it a lot. I think for me, it's like first of all, I don't have to be the one posting about everything.
Yeah.
Because if someone says it better than I can, it's do you know what I mean?
Sure,
Like,
yeah.
takes effort to make a reel. So if
Yeah.
Sam said it, and I can't really think of any other angle on it, and Sam can have like.
But also we're quite different in our approach, and you've got client number one, client number two. Client number one might favour Shaz in terms of his style, the way that he'll go about doing things, and client number two might favour mine. They're both after the same service, but sometimes it's the individual and the approach that's going to be slightly different that will work for better.
Yeah.
And the thing is as well is if client number one would work better with Shaz, I don't want client number one.
Yeah.
Because then that relationship just doesn't work, and it just ends up being difficult.
Yeah.
I'd much rather have 10 client number twos than 100 client number ones.
Yeah. Plus, you'll get something out of just referring it to Shaz anyway. You've helped out that particular client, right?
Absolutely.
So,
Yeah, it's the law of reciprocity, guys.
absolutely,
That's it.
absolutely. Yeah.
Try saying that when you've had a few.
Yeah.
Yeah.
Luckily, I'm teetotal.
I know. As soon as I said it, I was like, oh,
Yeah.
God.
Yeah.
All right, let's start with the basics
Yes.
then. What exactly is a broker, and what's the benefit of using one?
You're so good at this. You talk about what brokers are all the time.
So a broker essentially is a person, a middleman, who takes stock of your information and your deal and your wants and needs and circumstances, and also your project, your property deal. They then look at the whole of market. We'll maybe come to that phrasing, but the whole of market for lending. They make sure your deal fits what the lender wants, and whatever is again the best deal for you, they'll recommend based on that. Now, the benefits, is that what you asked as well?
Yeah.
So benefits is some lenders, especially in the specialist space like buy-to-let and investment lending, they don't work with direct clients. They'll need a broker to work with them anyway. So the first thing is you need for that access. Secondly, all the paperwork, the admin. There's a lot of firefighting, which I think people realize. Like, there's a lot of back and forth with underwriters and lenders that we deal with. We don't tell the client because they don't need to, but they don't realize there's that going on. So a lot of firefighting, certifying documents, just a lot of admin in the background that goes on, and also relationships. So not to say we'll get stuff over the line that doesn't fit policy, but if there's something that is a strong case and there's a strong rationale, and we've got a good relationship with the lender, we can leverage that and say, look, because of this and the presentation and the packaging, this needs to go ahead. Let's do it, and it can happen.
To build on that, I'd say at the very base level, and I use this always as an example of what I'm not, but I think as a base level, a broker is a human calculator that's there to go through the numbers and make sure everything stacks up and recommend the best financial product. I mean, that's a prerequisite. Every single broker should do that. And I love it when I see some people in our industry that will say, we'll always recommend the best product for you. Yeah, mate, that's what a broker does. Like, every broker should do that. That's like saying a bridging lender's USP is speed. I love that.
It's the default position.
Yeah, it's default position. What a good broker, I think, does is takes a more holistic approach to what you're trying to achieve. And through, Shaz and I are very lucky. We've got an array of amazing clients that have been there, done it, got the t-shirt. Some of them we've helped get there. So we can use that expertise to add an extra layer on top to actually say, well, look, like I said before, in terms of being that success partner, we're not just there to crunch the numbers. We're actually there to see through the numbers and ask the question, why are you doing this? I don't know if you do this, but there's been a few times when I've spoken to a client and we're going through a deal and I'm like, mate, don't buy this
Doesn't
shit.
work.
Okay.
I've seen you post about this actually. I think it was yourself and maybe Chanel on a video. I think sometimes often, all the time, it's good to have an extra layer, a person in between to sense check the figures with less emotion attached. Because as an investor, you will put emotion in that deal, but a third party can look at it purely from a lending and numbers perspective and say, look, this doesn't really work as well as you think it does.
Yeah.
What does the exit look like? does it actually work? So I think that's also a really good benefit. Is you've got someone independent who's still looking out for your best interest, but impartial as well.
Yeah.
And you know, on that is, and this is where it comes down to it sounds selfless, but there's a selfish element to it. If I've got a particularly it's like a brand new client and it's deal number 1 or something, I don't want them to bugger that deal up because I want to be able to work on deal 2, 3, 4, 5, and 6 with them as well. So if we can get in early and give them that really good advice to start with, then that will set them up much better moving forward. And this is where, you know, this is why, you know, the kind of value, like I get asked all the time, you probably get this, people are like, what, you know, why are you giving away all this free information? Brokers a lot will come to me, why are you giving away all this stuff for free? I'm like, because the client then comes to me and they're already slightly more educated. And that helps with the initial conversation. It helps us move through the process a lot easier. You're answering less questions as you go through it. It just makes the whole thing easier to do.
Yeah. A lot to unpack there. You've unpacked quite a few things I wanted to ask there. But you mentioned there, Shaz, about the lenders only work with brokers or some lenders.
Especially in the specialist market.
Why is that then?
They don't want to deal with clients sending like photos of their documents with their fingers everywhere. Like it's you know, admin basically. Also, they want a case to be packaged to a certain level, which again an individual investor probably can't do. Remote packaging and access and qualifications and all the FCA approvals, licenses, insurances, you know, stuff, the overheads that we have in our businesses people don't realize. That's the main reason.
And do you know what you've just said, that's the reason why they pay us. So that's why I think you've posted about this. People say, oh yeah, but you get commissions from the lender. No, it's called a procuration fee. What that means is thank you for doing our job for us. They're basically, it's almost like we're a temporary member of staff for that lender, and we are doing the work for them in house. So that's what we're getting paid.
It's not even a lot. If I'm honest, procuration fees aren't a lot. It's about 0.45 to 0.55% of the loan amount.
And that's only if it completes.
That's on it when it completes.
Sometimes less.
Sometimes less. If it completes, so 10 weeks after you start working on it. And that's a gross figure. There's net. There'll be like a club, payment club takes it. So when people say you earn a lot of money, yeah, we do. But in terms of individual cases, it's not a lot really.
On a mortgage, it's probably on average somewhere between £300 and £400 per £100,000 that someone's borrowing.
Net.
That is not a lot of money. Therefore, if you're going to go with a broker who's not going to charge you a fee, there's 2 things that are going to happen off the back of that. Number one, they are going to have to do a lot of cases. So they're going to be split between a lot more people. And in order for them to be able to concentrate on that many cases, it's going to have to be simple. Because you can't be dealing with complex stuff when you're dealing with 100 cases at the same time. On top of that, they are going to be very forceful with their protection sales. So, you know, they'll almost make it sound like you kind of have to take it out because that's where they'll make their little extra money. I mean, look, everyone should do that. Everyone should look at their protection and get that looked at every time they are taking out a new mortgage. But that's going to be the difference. If you want to work with somebody that has an expert knowledge of this sector of the market, you need to expect to pay a fee, because if you don't, number one, for me, I'm just like, well, you're undervaluing what I do straight away, so I don't want you as a client anyway. And secondly, you want them to spend a reasonable amount of time working on what you want them to look at. And if they're not charging you for that time, you have to question, you know, how much they value their own time, to be honest.
It always amazes me when people expect things to be free or they shouldn't have to pay for a service of some sort. Whereas in other walks of life, you'd always pay for something. You wouldn't go into a shop and not pay for something, or a restaurant and not pay for anything. So it's no different to getting a professional service. So
I do like, and I guess this is kind of more the business owner in me. I will sometimes, like, a great example is, I found out one of my clients is a really good web designer. So I've just said to him, well, I'll do a few mortgages for you for free if you sort our website out. Done. And then that works because you're like working together on something. And it also, actually, that also kind of builds a relationship quite nicely as well. But yeah, when it's just a transaction, like you say, like why shouldn't somebody? My favorite phrase: I love what I do, but I don't do it for love. So
love that. I like that. Might have to use that. All right, let's look at the different type of finance options then. So bridging is obviously quite topical at the moment. I've used bridging in the past. A couple of years ago, I got into bridging, but can you just break it down? What is bridging finance, and how should investors use it?
I'll let you go for bridging, Sam.
All right. Bridging is short-term finance. There are a few different ways that you can do it, but essentially it's a short-term mortgage to a certain extent. It gets a bad rep, I think, because back in the day it used to be um, much less regulated than it is now. People see the term unregulated quite a lot, because it just means that a lot of those loans aren't regulated by the FCA. They still are regulated. They're regulated by the PRA instead. But it's a short-term loan, and as a result, the big thing is where on a mortgage you're looking at like 25 years into the future, having to get to the point where you're paying back that loan. You might only be looking at 12 months into the future when you have to pay back the bridge. So how you're going to pay that back becomes a fundamental part of that process, and that's really, to be honest, that's one of the first things that a lender's going to ask is how we're getting our money back.
Yeah, what's the exit?
Yeah, that's the key.
Yeah.
Yeah.
So you've got short-term finance, bridging, and then there's like development and refurbishment. And then you got mortgages, so longer-term solutions like 25 years, 2-year fixes, 5-year fixes, or thereabouts. And that is, you've got tenants in, it's tenanted, it's cash flow in.
Yeah.
And you're looking at your plans. Do you want to raise money again in 2 years? Do you want stability for 5 years? And you kind of go from that, basically.
Yeah. You mentioned development finance there, Shaz.
Yes.
You want to talk us through that then? The process
Yeah,
of
it's,
that?
you know
'Cause
what,
again,
it's-
something I've
I
used in the
think-
past as well, but
A lot of it is just words. Like people say, what's the difference between development and refurbishment finance? Really, for me, it's just the level of work you're doing.
Yeah.
But yeah, so with bridging, typically you'll get 75% gross against the purchase price minus interest. With development, you get money for the work as well, but that's always paid in arrears, in stages, as drawdowns.
Yep.
So you have to start the work. Then you get an asset manager who's charged like £600 to take a box, and then you get the money back and you recycle that again and again and again. With development finance, it's a similar thing. So you get normally 70% against the purchase, 100% towards the work, but it's normally capped against the end value, or GDV as they call it. Typically
Yeah,
65.
not done up value. That's
Depends which course you've been on.
If I see anyone
Depends what
use
course you've been on, right?
DUV, I'm like, ugh.
Yeah, no, it depends who've trained you, but so they cap it against normally 70% against the end value, so there has to be enough of an uplift
Yeah.
to give you all the money for the work. And then you've got the bit in the middle, which I'm doing a lot of now, so kind of HMO conversions or BRRs, buy refurbished refinances, where people want money for the work as well, but maybe it's like 50 grand. It's not a large conversion. You can still get funding for that, but I don't think it's worth it, if I'm honest, because the fees for the asset manager and all that kind of stuff adds up. If you can raise that money elsewhere, it's probably better to do it that way.
yeah. You mentioned BRR there as a strategy. You
Yeah,
hear
yeah.
this a lot. I'll be honest, when I first started in property and I heard BRR, I was like, why is everyone cold in property? But what is the BRR? Because there's so many R's sometimes. Or is it 3 R's? Is it
People
4
overdo
R's?
it, don't
Like,
they?
Yeah,
Yeah, buy,
there
rent,
doesn't need to be
refinance,
any more R's
rent,
than
repeat, yeah, rinse.
Yeah.
Look, BRR basically simply is buy, refurbish, refinance. You buy the worst house on the street, add value to it by giving it some black taps, and then you refinance it once the value's been added.
So we're going with 2 R's, yeah?
Yeah, So yeah,
Keep it
look,
simple,
yeah,
guys.
exactly.
Yeah.
Simplicity is the key.
Yeah.
Yeah,
Not
yeah,
B
yeah.
triple R. Then I hear that a lot. B triple R.
Triple R.
B
Sounds like
double
a
R.
wrestler or something.
Yeah,
Like,
Yeah,
no.
exactly. No.
No. So yeah, it's buying the house, adding value,
Yeah.
then refinancing against the end value. Now, a couple of years ago, this was great. It was easy, get all your money back out, got a free house, as it were. Nowadays, money is left in the deal, which is still fine. If you've got like £5,000 left in the deal, and a house is worth 150.
Yeah.
In theory, that house only costs you 150.
Yeah.
It's what you see on social media, right? But it's harder to get all money out deals now because of the market.
Yeah. In what way? What do you mean?
So because the costs of doing the work and the renovations are higher,
Yeah.
but the end values are not going up in line. When you refinance at 75%, you're leaving money in the deal. But lenders are okay with it as long as you're okay with it, as long as it's your money. As long as you can clear that debt, they're happy.
Yeah.
Yeah.
I was going to ask then. So does that make getting finance harder then because of that? But it sounds like it doesn't necessarily.
Not really. Obviously one of the biggest issues that we've been facing recently with rising interest rates is that the rental calculators on the back end aren't stacking up as they used to.
Yeah.
So I am finding lenders are being a little bit more critical on that. Although I love it. There are certain lenders out there that do bridging, and then they'll also do mortgages and stuff on as well. One of my favourite things is when they come back and they say to me, "Oh, can you provide evidence that you can refinance this?" And I'll go, "Can you refinance this?" And they'll go, "Oh yeah." And I'll
We'll do
go,
it.
"Well, we're good then, aren't we?"
Yeah.
Yeah.
So worst case scenario, I'll bring her back to you. And they say, "What do you mean worst case scenario?" I'm like, "Well, I'm not going to bring her back to you, but because your rates are ridiculous." But yeah, I do find, I don't know if you're the same. Like I get on with underwriters really well. I have good conversations, but sometimes they are just reading from a script, and they just don't think outside the box sometimes, and just that is such a good example.
That's a
Like,
polite way of
can
putting
you
it, yeah.
can you
Yeah,
refinance?
would you
it?
lend on the exit? Oh, let me check our policy. Yeah, we would. Great.
Yeah.
I have a question, Sam. It's not my podcast. I got a question though, because it's worth putting it out there. I think obviously because we're on socials, a lot of our clients come from social media, and a lot of the training is on there. Um, I'm very risk averse, and maybe that's just me, but people raising money from social media, 150 grand, unsecured personal loan, bridging lenders are okay with it to a certain degree, but it always baffles me like why the FCA haven't caught up or what, because you can't really be asking for money that way.
Yeah.
Your thoughts?
Yeah. Again, this comes back around to what we were saying earlier on about being a little bit more holistic in what you're doing, looking at the bigger picture, and actually giving proper advice, the capital A advice. And I will look at something, and it's amazing how many times I'll look over it, and like you said, they're borrowing from this person, that person, this person. Right, okay, right. Number one, origin of funds on that is going to be an absolute nightmare to
Because
trace.
a lot of times they're offshore as well, like
Yeah.
Oh, it's
outside of
crazy.
Europe, like.
Yeah, and they're like, oh, so hang on, I've got to go and find out where they got their money from. Yes, because if they've done it through some drug deal in Colombia, you're going to jail,
Yeah.
pal.
Yeah.
Like you need to do this for you, not for me. But so they get all this funding together, and then like you said, the BRR money in money out deals are so few and far between at the moment that it's practically impossible. So then when you're factoring in the fact that you might have to actually then give some money back to somebody else, you're going through the deals. It's incredible how many times I'll speak to somebody and I'll go through it all. I'm like, right, we're going to 75% it on the back end. We're going to take it down by 10% on the value anyway, just because most of the time valuers seem to be getting out of bed on the wrong side at the moment. So we'll factor that into our risk. 75% of that, yes, you can repay the bridge. You're not making a lot of profit. How are all those other people getting paid back?
Yeah.
And sometimes it works because it might be, I don't really like it when clients are raising money on their own personal homes, but as long as there's a plan over a certain period of time to get that down, I'm all right with it. But you're raising a second charge on your home, yeah, okay, that doesn't need to be paid back immediately. But if you're getting an investor to come in and give you the deposit plus maybe the stamp duty, maybe something to cover the rest of the
Everything,
fees,
like,
and then the
yeah.
interest on top of that. Hang on, how are they getting their money back when we're only refinancing
Yeah.
70% of the end value? It sometimes just doesn't stack up, and it's again, like you said earlier, we're the extra set of eyes to go, that
Yeah.
doesn't work.
And when I first started fresh as a broker, like, I think from bridging lenders, they used to ask me this thing, and I used to be like, why are they asking me? So the word skin in the game, right? When I was like, I'd be like, oh, this has been difficult now, but I get it, because if you're a first time investor, you've got no assets, you've got very low income because you're just fresh out of a course or whatever, you've raised money from social media, so you've got none of your own money going in. You're not going to be able to pay the investor back just yet. Lenders will say, well, why? What are you involved in for? Like, you may as well step back and let the investor do the deal. If they're funding the deposit and the refurb, and the bridge is doing the rest, you may as well be a source of packaging that together, right? And also, just for people watching and listening, if you have got investors, most bridging lenders, they're okay with it, but they need a loan agreement, they need ID for the investors, anti-money laundering checks, and they also generally now make them sign a deed of subordination, which is extra legal document to say I have no interest in the actual property. But all this adds to your legal fees, of course. So
But this is where a lot of people make mistake, is because they will offer a charge on the property. So it might say, well, actually, no, but I don't need to pay him back for 3 years. Yeah, but you need to relinquish those charges when we're refinancing. So, and that needs you can't just sit there sit that on there like completely. So yeah, it is something that and this traces back to what we were talking about, like the course thing.
Yeah.
Look, I'm not against courses by any stretch of the imagination. I think it's a really good starting place. But I think that's what it is. It's a starting place.
Yeah.
The two things on courses that I believe are not covered well enough and not covered in depth enough, and is usually quite outdated, is finance and tax. I think they're the two things on courses that are not covered well enough.
But it's so dynamic, isn't it? It's changing all the time, isn't it? So unless you're keeping up to speed with things, it's going to be.
I was actually on a call with a client about 3 or 4 months ago. I could hear that I was on like loudspeaker, so I asked them, and they said, "Yeah, you are," because there was 2 of them, and it was a bit noisy in the background. So I'm talking to them. Turns out they were at a course.
Oh no!
Wow.
And
was it one of those live calls that they do?
No. Luckily, it wasn't that. Actually, not unluckily, it wasn't that, because all the people in that room probably would have walked out. But they had been advised to purchase a multi-unit freehold block that they were going to renovate and split the titles on with a buy-to-let mortgage, right? And I said, look, it sounds very much to me that the person that had said that maybe did do that like pre 2007 because that's what people were doing. That's what you kind of did. That's not how you do it anymore. This is how you would do it. Turns out the blooming trainer was standing with them while he was doing it. And she was like, "Hi, Sam." I was like, "Hi."
It was definitely
You know who she
You
was.
mentioned it's a she now. I'm trying to guess.
Yeah, and I'm thinking, are you going to invite me to talk at your next course? Is that what's going to happen? No, it didn't happen.
Yeah.
I would have declined anyway. But yeah, and she actually she was all right with it. She's quite humble with it.
Was it just the wrong advice then? Was it actually wrong?
It was just this particular person. They had built a very big portfolio pre 2007, and they were telling them what they did, and that's okay. But
You can't do it now.
But you can't do it now,
yeah.
you know. So it's all well and good to share these stories, but they've got to be up to date. And this is why actually I say to my clients, and I'm actually really, really lucky because I've got, like we said, we've got really good clients. So I'll talk to a newbie that's just come off a course, and actually I'll be like, you need a mentor. Let me put you in touch with one of my other clients because she or he will be amazing for you because they're doing exactly what you want to do, but they're just 2 years ahead of you. So they're able to give you like up to date knowledge and help doing that. And that's, I think, jump on a course, do your three day, give them a couple of grand, but stop there. Yeah. Understand that going on this course is a place at the table in a community, and you're just going to get some base level knowledge, get you up and running, get yourself a bit motivated, and then just get out and do it and learn for yourself. You know,
I've always said courses are just for foundational knowledge. It gives you confidence that it's possible and to go out and do it. But you've got to take it to that next level. You can't just rely on a course. It doesn't give you everything. But unpacking some of the stuff there. So what is the ideal client then? We spent all those variables that you said there. First time investors coming to you, with a deal. What are you looking for?
I think
in a good deal.
Someone who's ready to proceed first of all.
What does that mean?
So, like when people say to me, Shaz, how long will this bridging loan take? And I'm like, how long will you take first of all? Because you're not ready. Like, so when I say proceedable, I mean you've got your documents, you got your proof of funds. Yeah. You got the offer accepted. Like, don't tell me.
I'm thinking about buying this property.
Yeah. You're not ready. So, if someone's proceedable, someone who trusts me or trusts you because they're not then going to second guess you and put it on Facebook just for a second opinion. Someone who wants to do things the right way and they understand why that's the right way because it's the right way, and someone who is looking at the short, medium, and long term for their portfolio, because that is kind of like you said, holistic advice. You want to understand where they want to end up with, but you want to advise based on that.
Yeah. I think that last point, massively. I was going to say exactly the same thing. It's nice to get on a call with a client and they've got quite a. Well, actually, I was going to say it's nice. It's nice when they have got a very, very sort of focused view of what they want to achieve. But actually, sometimes even if they don't, I quite like chatting that through with them and sort of offering some small A advice on how they might think about doing that. And I think just for me, like Shaz says, someone when you say proceedable, I'm thinking of it more from a mentality perspective, not somebody that's just talking a good game. I want to work with people that are action takers, And actually, we were talking about the event I went to on Tuesday. One of the speakers said something about because it was to do with social housing. One of the speakers on the panel said when someone approaches them and asks for advice on that particular strategy, the first thing she does is send them away and go do some homework. Because if they're not willing to do a little bit of groundwork first, why should she give up so much of her time for that?
Yeah.
And in a similar way, look, we're service providers, we're here to help, but at the same time, we're not here to wipe our clients' asses. To be perfectly honest, it's got to be a two-way street, and I think that's where they've got to meet us in the middle, and that's the kind of client that is perfect. Someone that sees it as a relationship, as a partnership. Yes, they are paying us for a service, but it's we're figuring out a way of how we can proceed together and both be successful off the back of it, and that's a good client. And to be honest, if they fit that type of description, they've got that mentality. I really don't care whether they want to borrow 60 grand or 60 million. I really don't care.
Yeah. Do you ever turn away clients at the start then, based on this initial sort of fact find exercise and things like that? Is there?
I have in the past. Only if I can tell the chemistry isn't there.
Yeah.
I've got the headspace to deal with nonsense, so I'll politely be like, look, I don't think we're getting on. Just to save us both some hassle, I suggest you look elsewhere. But very few and far between. But yeah, if someone's just doing my head in because they're just not understanding, or I can tell they're just blagging me. I'm a blagger. I can tell if someone's blagging me, right? So
can't blag a blagger, right?
Can't blag a blagger. I've been in sales all my life, so I get it, right? Or if someone blatantly wants to do mortgage fraud, mortgage misuse, and I can tell that's where they're gearing that conversation after maybe the first or second or third time of me trying to divert, and look, again, not for me. However,
Yeah.
you might find someone else. So yeah, those kind of situations.
Yeah.
You got like a broker you don't like that you divert them to.
So
If you say me, you're in trouble.
let me
That's mean. That is. That's mean. That
let me
is.
tell you what I do. This is just a little inside joke. That because we're really bored, we have no really not busy at all. If on like Facebook, someone's like, I need a mortgage broker, but it looks very complicated or it looks very like borderline dodgy. I will tag him in or someone. I'll tag my broker friends in. Not be like, these guys can definitely help you.
I have seen you do that. I have seen you do that.
So if you get a call and it's like, Shaz recommended you to use Sam, you know, oh my
Yeah,
god, yeah.
it's amazing because they get exactly the same thing every time. It's this noise. It goes, dude.
So on the flip side of that, then, what's the most like common reasons that deals fall through?
Valuation doesn't stack up is a big one.
Right now, especially, yeah.
Yeah, and I think, do you know, just a minor tangent on that one is that I think, again, when we're talking about clients' education, understanding, all this kind of thing, the valuation is something that I think a lot of people don't do their due diligence enough on, and I think that's where it can fall down. Look, I had you talk about clients that you kind of politely say no thanks to. I had somebody recently was just talking, and he was getting quite annoyed with me with the fact that I wasn't going to tell him what his property was worth. I'm like, that's not my job, right?
Yeah.
I'll do my best to point you in the right direction, but again, it's this whole, you got to meet me halfway. Like, you're the investor. I have to trust that your figures are correct. What did I have recently? A client had a go at me because we had a down valuation. And he said, well, you should have checked my figures for me. And I said, what? In terms of like, so you wanted me to go and check that you, as the professional investor, you know, we're going to, in the end, that didn't work out.
Yeah.
Yeah.
But yeah, I think that's valuation massively at the moment are a big one.
I was sat with a valuer yesterday, and she was saying, especially with like bridging and development stuff, that people don't realize, especially investors, that there's so many ways they can be instructed. Market value, 180-day value, 90-day value.
Yeah.
You know, so you need to know. We need to know what the lenders and what they instruct on based on, and what that looks like. You know, especially with HMOs and commercial valuations, which you don't get all the time anyway. There's a lot of variables, and we're not in control. We can guide as best we can, but it's not down to us.
I get a lot. I don't know if you get this. I get a lot of people going, so I'm doing a HMO conversion, great example, and I want to guarantee a commercial valuation at the other end. Like, awesome. But I'm thinking, like, I want to go with a lender that does commercial. But yeah, that's fine. We can do that, but as long as it fits certain criteria. No, I want to guarantee what it's worth. No, that ain't going to happen. And then they'll say, well, I spoke to this broker and he said that if we go with this particular lender, they'll do the bridge and then they'll guarantee that. No, they won't. They're still going to send out a valuer again. This whole bridge to let thing, right? It's why would you get two average parts of a loan because they fit together? Why don't you go and get the best bridge and the best mortgage?
Yeah.
Doesn't make sense.
With that, if I do get people saying, well, so and so broker said, I'm like, well, again, politely, go use that broker. Like,
yeah. The best one is so if you get right. So I've had a broker tell me this. Okay, well, why are we talking then?
Yeah.
Because did you like what they said? Yeah. Awesome. So
yeah, but I've been told you're really good.
Yeah.
Do you know what I mean? It's one
awkward.
of those.
I'm glad you brought that up because I see that. I've seen that a lot as well. This guaranteed, exit doesn't exist, does it? Does it really? Or because surely, if they're gonna get but if you guarantee something now, something drastic could happen in 12 months. Are they still then gonna say, oh yeah, we guaranteed it at that 12 months?
So policy can change.
Yeah. Policy can change. The market can change. We've seen it change.
Pandemic and anything could happen.
You know what? Just to not be too negative on it. No, Shawbrook, what they'll do is they do with the bridge. They'll tell their valuer to give them an end value just to make sure the deal works.
Yeah.
I think as long as the work's done in 3 months, then it's not a full reval, it's a reinspection. So in theory, as long as the work's been done, you get the same valuer, same end valuation. However, not guaranteed.
Yeah.
If you've gone off your scope of works or the market's changed or anything else, it'll be different.
That's what I mean. Yeah.
So there's a bit of certainty.
Yeah.
But it's not guaranteed.
Yeah.
And it's like anything. We go to, lenders have got this magic terminology that they use when they're saying, yeah, we can do it. What they say is they don't say, yeah, we can do it. They say, this is something we can consider. And that's their get out of jail free card. That if something pops up at the end, because no matter what case I'm doing, I'm always getting in writing that they've confirmed that the criteria points I've raised with them, they're okay with. Because unfortunately, sometimes you will speak to someone at the front end, underwriter gets hold of it, they don't agree because even though the criteria is in black and white, they both have a different opinion of it. it happens, and then you've got that to fall back on, and sometimes that can help.
Yeah.
But you're never going to get a lender, no matter what it is, to come back and go absolute guarantee. Yeah, this is a slam dunk for us.
They're going to caveat somewhere. I'm sure.
Valueless comments as well. This is why
Yeah.
I always think it's best to wait an extra day, get an email back in writing to say you've checked. This property is next to a petrol station. It's opposite a pub. Will you still lend? If the answer is valueless comments, but if it's like this is still within policy, it's different, isn't it? So you want that in writing. I'd rather wait a day or 2 days to get that than actually go straight forward.
Yeah. Cool. So I put out a story last night. I don't know if you saw it, asking some of the people on Instagram to put some questions in. So we did get some in. Do you mind if we go through some of them?
Let's do it.
Yeah.
I'm used to answering random.
Were people slagging us
live.
off?
I'll be honest. There were some trolling questions. So I don't know if you want me to ask them or not.
Please
start with those. Lead with those.
Let's do
Let's do
those.
okay.
Love it.
As long as it's not personal attacks, I'm
I don't care.
Like...
I'm thick-skinned, man.
I'm
I've been doing this a long time.
I care too much for everything.
I've got enough grey hair.
So first trolling question.
Are you going to name who it's from?
I'm not going to name. I'm not going to name and shame.
Okay.
Well, I haven't got it here to be fair. Anyway, I've copied and pasted the questions. But
Right.
First question was: should your broker be actively invested in property themselves to advise on broker?
Such a great question. I'm so glad you asked, anonymous troll. 65,000 and 100. I think in short, it may help, but honestly, I think it's a different skill set. Same as like football managers versus football players. It's just totally different skill set.
Yeah.
If I was a great investor, I wouldn't be mortgage broker. Do you know what I mean?
Yeah.
That's my short answer. I'll let Sam elaborate.
Yeah, I tend to agree. I don't think it's not mutually exclusive. So can it help? Yes, but that comes with the holistic. Like why? I say to my clients, I've done more deals than you because I get to look at these deals every single day. Well, you do three a year. I do 3,000 a year. So actually, I've got a better knowledge of this. Also, actually, what creates, in my humble opinion, a better brokerage, which is a different kettle of fish altogether, is having an expert at the top that is also a very good business owner and is business system minded. And this will come on to, we'll probably talk about strategies and stuff later on. Running a business is a cash flow section of your overall wealth strategy. That's what I'm doing, and I get a better return on investment running my business right now than I do investing in property. So that's why I'm doing it. It's not because I don't want to invest in property, it's because my ROI is better on my business. So that's why I'm doing it.
Yeah. What advice would you give for refinancing onto a residential mortgage?
Sorry, was that the only hate question?
We'll come to know.
There's more.
Okay,
Fine.
there's more.
Love it.
I don't do residential, if I'm honest, so I don't really...
Refinance onto a residential from what?
Do you know, it's a good point actually. Yeah, the question just says, what advice would you give for refinancing onto a residential mortgage? So maybe it's current market now, everyone's coming out of their initial product from 2-3 years ago.
I mean, look, we're probably not the best brokers to ask this question to because we're not doing it a ton, but it's like anything. Do your research, understand your affordability. Anything to do with residential, I'm quite open about my thoughts on residential mortgages. I think we live in a society, unfortunately, that has been made to think that unless you own your own home, you're some kind of substandard human being, which is not the case at all. I think people overstretch themselves with residentials all the time. I hated the fact that it was celebrated that the 1% stress testing on residential mortgages was removed a little while ago to make it easier for people to get mortgages. No. It should be freaking hard to get a residential mortgage. You should have to work your arse off. That's the top level. I don't believe in 99% loan to value mortgages. I don't believe in 95% loan to value mortgages. I even think if you can't do something to get a 10% deposit for your home, then you do not deserve to own a home. It's as simple as that.
It goes back to your point, skin in the game, isn't it?
Yeah, or be more patient. Do you know what I mean?
Yeah.
And also, so when I was at Barclays, we were on a special team, interest-only maturities. So people had interest-only mortgages and said, yeah, I'll pay it off with my endowment or this and this. And at the end, they had nothing. I've seen the back end of people making bad decisions, right?
Yeah.
You don't want to be in that position. So I think interest-only residential is risky as well.
Mm-hmm.
So although people come to me and say, I've seen someone else do it or another broker said, it's not the most sensible thing. I think patience is important, especially now. Like Sam says, if you rent the property and it's in good nick and you make it your home, it's a home. You don't need to have ownership of it.
There are so many pros to renting your own home as well. I have loads of my clients have got hundreds of properties, but they still rent because it gives them freedom and they can move about, and they prefer to put their money into an asset that pays them
Yeah.
rather than
Yeah.
into a home, which is ultimately your biggest liability.
Just to answer that question, maybe it's be proceedable, get your documents in order, so income documents, ID, address, and just be prepared that payments are going to be higher.
Yeah.
I think work out your budget. It's different. Affordability will be what the lender thinks you can afford a month, which might be £1,000. Your budget might be £600. So make sure you're clear on what your budget is. You don't want to be overstretched.
Yeah. Ready for the next troll?
Let's
Oh.
go for
I
it.
like this one because you've already touched upon it
multiple.
anyway, but I'm gonna ask it anyway.
Okay.
I'm actually gonna read it verbatim as well. It's actually quite funny.
Oh, God.
I don't know who you guys have pissed off, but you brokers are money grabbing sharks. You get paid commission from the lender. Why do you charge a broker fee as well?
Yeah, we are 100%. We are horrible human beings.
It goes into my donut kitty. I love donuts. I need to charge broker fees to pay for that. I think Sam's obviously elaborated earlier on. First of all, yeah, the procuration fee that we said, it's actually not a lot. We've broken it down. It's not a lot. Secondly, you don't work for free. Okay. It's a form of skin in the game and commitment from the client. It's a commitment fee. It's an admin fee. Call it what you want. It's a fee to get the job done, right?
Yeah.
If we didn't charge fees, one, you'd have to do a lot more volume, churning business, as it were, churn and burn, not care about the client and actually their deal, just care about the numbers going through. Secondly, you'd be more inclined, perhaps, if you were that way inclined, to put deals in with the lenders give you more commission, because now you're commission centric, right? Thirdly, I think, again, if we weren't charging fees, clients could easily pull out, or Val's not come in, I don't want to do it, or I'll come back to you next month, or because there's nothing in there, there's no risk in it. So it puts a client at a commitment kind of point. There's skin in the game from the client. There's more focus from us because we're not chasing a commission. We're trying to chase the client's best interests, and all gotta make money, right?
Yeah.
Do you know, I genuinely feel really sorry for that person that's wrote that. They're number one, they're clearly having a crap time of it. But secondly,
Well, this person there was no post on his page, by the way. So
However, guys, there are some Fifi brokers. lnc.co.uk worth every penny.
they've got a really good.
That was a joke, by the way. They're free. They're worth.
Have you seen? They've got a great website, by the way.
Their
they've
branding's
got
pretty
proper,
okay.
and they've got like this decision in principle generator thing on there. I was like,
Generator, was it PDF?
I was looking at this. I was like, this is amazing. This is really, really good.
You got a coupon code for them, even though they're free.
Yeah, they give you money. They give you money. But joking aside, that the person that wrote that, whether they were sort of doing it half in jest or anything, but if you have that mentality that anyone that's offering you a service doesn't deserve to be paid for that service, that person's going to be a very, very lonely and very poor property investor. And he's going to be poor because he's not going to have any properties. Yeah. He's going to have solicitors don't want to work with him, brokers don't want to work with him, tax advisors don't want to work with him. Could be a her. I'm assuming it's a him because us men are more hateful.
The aggression. Yeah.
Learn to surround yourself with good people and pay them accordingly.
Can I just say though, the opposite of what we've both just said. That is to do with mortgages. The fees on short-term lending, bridging development, and all that kind of stuff is higher. You don't get paid anything from 1% to 2%. I'm just going to go out on a limb here. I think, in my personal opinion, look, say if the deal is going to get you a £10,000 commission.
Mm-hmm.
In my personal opinion, have I done enough work to warrant £10,000 because the deal's bigger? Probably not. So on some occasions, for things like that, I am a bit flexible. I'm like, don't worry about the fee, because ultimately, transparency is key and building relationships is key.
And trust.
Yeah. So if you're my client, you'll see on the thing it's 10 grand to the broker. So yeah, there is some flexibility on it, but it's about relationship building, right?
Yeah.
I think in my head, my personal thing is like £5,000 probably tops is what I want to earn at the most, because especially with development deals, you're going to come back for the exit as well. So we're getting 2 bites of that.
Yeah.
So we're not greedy sharks. For me, anyway, it's just about relationships.
Do you know one of my favourite things to do? And I don't think I've ever told anyone this before. I will, if I've got like clients I've been working with for a while, I will just, if they come to me, hi Sam, I've got another remortgage, I go, cool, that's free.
Yeah.
And I just randomly
Repeat
don't charge
business,
them.
right?
Yeah.
Just randomly, and they're like, what? They go, have I done a certain amount? And you're checking, and I'm like, no. I've just decided that I like you, and I just
we work well together. You're proceedable. You get on with it, and you trust me. You're not going to ask me, is this definitely the best rate we can get?
Yeah.
Well, of course it is. Yeah, I've spent time on it.
That's the pet hate for brokers, isn't it? That
Pet for me
there,
personally,
right?
because it's like, no, I've given you the second best. You got me.
Yeah.
Like,
or the third best. Yeah.
Yeah. Lol.
Yeah, I've just stuck my finger in the air. But there's a reason why that happens, and there's too many brokers, in my humble opinion, that do this, which is that what they'll do is they'll get you on the phone, they'll get some basic information off you, they will check on their sourcing software, whatever comes up the top, they'll quote that to you, And then what happens is, and they do that to lure you in.
Bait and switch.
Yeah.
Sales.
And then what they do is they get all your information. They go,
I didn't know
I've
that.
just
I didn't know
noticed
that. I didn't
this,
know that.
which
Yeah.
means now that 3.5% has become 4.5%.
No, but they blame the lender. They blame the lender.
But I've got your documents now already, so why don't we just go ahead with that one, because that's the best thing for you. No. Do it right first time, and that's in terms of choosing your broker. A really good way of determining whether a broker knows their shit or not is whether if they sound like they are reading from like doing I don't do questionnaires over the phone with my client. Sorry, FCA. Because I know what to ask them. I know what I'm looking for. I want to give them quick advice straight away. And if you can hear that they just seem to be going through a script, chances are that is something that might come along. So, that I'm probably just absolutely rinsed brokers that are really diligent on their calls.
Honestly, mate, do your own due diligence.
Next semi-troll question. It's not really. I think it's a valid question, to be fair, knowing how busy life can get running the business. So it says, you guys do a lot of networking. How do you actually get any work done?
I concern because we fit the networking in around all the other shit we have to do. Plus, it's not just us. It isn't just us. Shaz and I are the faces of our business, but there is a lot of people working behind the scenes to make sure crap gets done.
Yeah. Plus, first of all, networking events for an evening. So outside of working hours, use your heads, guys. Secondly, I'm sure Sam as well. I'm really good at my time.
Mm-hmm.
So if I know I'm here today, I've done my first morning's worth of work in the morning.
Yeah.
And I've scheduled some meals to come out now, so people think I'm working now. That's a pro tip as well. But like, just be good with your time. Be good at managing time. Like I say, be a business owner, not.
And manage expectations as well. I think, again, this comes back to like sort of choosing the right broker. I was speaking to somebody fairly recently who runs another brokerage, and he was like, our clients love the fact that we don't have any administrators. They get their broker from start to finish. And I said, look, that's cool, and if that works for you, like happy days.
Until you get busy.
Yeah, I said, unfortunately, what happens as a result of that is the better the broker, the more likely it is that you're going to get a massive up and down swing on the quality of the communication and service that you get.
Yeah.
There'll be like a plug hole at some point. I
know I see one of my major roles is creating a stable process from start to finish, meaning that, we joke internally about we try to create the McDonald's model, where it doesn't matter which broker, which case manager, whether I'm doing it, someone else is doing it, you get exactly the same. You go into a McDonald's in Chicago, you get a burger, it tastes the same as the one in, Wood Green down the road. Yeah. Right? And that's what I'm trying to create, so that, and again, it comes back to every client gets the same quality level of service. And you're not going to do that unless it's like working behind the scenes. And I'm not saying that there aren't some amazing one-man band brokers out there. There are, but at the same time, you also have to understand that they then have a certain amount of hours in the day. Just maybe don't have the expectation that they're going to be able to call you back within a 24-hour period if they've had a load of new inquiries.
Also, your growth's going to be limited then, isn't it? If you are just remaining as a one man. Yeah. We'll ask one more and then we're going to play a little game. It's a good question, actually. What are some of the common mistakes that newbie investors make when entering the property market, and how can I avoid them? Bit of an open-ended question, isn't it?
Go on.
First of all, working with the wrong broker potentially. So I think people don't ask enough questions when they're trying to choose a broker.
Yeah.
So instead of questions like, are you whole of market, or what lenders can you, it's more like ask them this question, which is, I'm looking at a bridging deal or commercial, specific to what you're doing. Is that something you deal with? How many of those do you do? What lenders do you work with in that space? Mm-hmm. That kind of question, as opposed to, are you whole of market? Because that's a nonsense question. Mm-hmm. So yeah, working with the wrong broker because you're not asking the right questions is one for me. Anything?
Yeah, and I think it's being self-aware of where you are as well. I'll get a lot of first timers and they'll go, oh, I saw so and so on social media has done this deal. Yeah, they can do that deal.
Yes.
You can't, because there is not a lender that is willing to give you that amount of money for that deal. Yes. You've got to start, and realize where you fit into the puzzle. One of our jobs is actually to help you sort of escalate through or go up the ladder of lenders and allow and grow out the number of lenders that are going to be available to you based on the experiences you've got. If you are a first-time buyer, first-time landlord, you are a risk. You've got no track record whatsoever. You have to think to yourself, would I lend to me?
Yeah. So when people say like, this lender's been really difficult, they're asking so many questions, looking for a reason not to lend. Potentially, maybe then they're asking a few questions, but lenders don't make any money until they lend the money out and redeem it back on. So it's a silly point of view. And also, just to add on what Sam said, I think it's about positioning. Our job is to position you as the ideal client for that lender, and especially on development and bridging deals. If you're first time, so you've got no assets, no liabilities, and you're not proceedable in the sense of you've got the quote, and you're like, let's get the valuation booked in. Okay, but where's your proof of funds? Yeah, I'll raise that in the next couple of weeks. I'm sure you will, and don't get me wrong, but I'd rather you position you as someone who's ready to go ahead than someone who's going to do it on the back end. So stuff like that, just bad positioning.
That point about funds. So this is another thing that pops up quite a lot. Is you'll speak to someone and say, right, I'm just doing some top level figures here. Let's have a look at this deal. Okay, we're going to get a bridge. It's going to cost X, Y, Z. Probably going to need around this much as a deposit, and then of course we've got to cover. You've said your work's going to cost 25 grand. Okay, so all in, you need to show this. What do you mean I need to show that? You need to have it day one. They're like, well, no, I'll just earn that as I go through. No, that's not a guarantee, is it? Because the lender, if you're doing a BRR and you're getting a bridge, the lender getting their money back is contingent on the refurbishment work being done. They need to see at the beginning that you have the available funds to cover that work, and a contingency on top of that, because as we know, things go wrong. So you can't expect a lender to be like, yeah, cool, get on with it, and hopefully it'll work out.
Trash the place completely, go back to brick, and then
just figure it out then.
Yeah.
It's interesting then. So obviously, as a newbie starting out, it's very hard to get into property. Using bridging finance and lending. So, how can you go about it? I've been through the process, but I had a property, so I had an asset. But if you've got nothing, you're starting from scratch. What are your
There's still options. I think what Sam said is being aware of that I'm a first timer. I'm quite new, so maybe a simple BRR would work rather than going into like a commercial conversion. Still get it done. Probably there's still lenders out there, but the amount of questions and documents and challenges and all that kind of stuff, is it worth it? They probably want PGs from everyone else in your family to do that. Like, whereas start off with a simple flip, get your cash pot bigger and then move into these deals. So like Sam said, think of what you want to achieve on the end, but build up to that.
I'm a big fan of flips because I see it very much as there's sort of two ends of the spectrum, which is when you're starting out, cash flow is the most important thing to you. As you get, like, I don't know if it's the same with you, Shaz, but I would say probably 90% of all the clients I speak to and I work with, their end goal is passive. That's what they want. They want they're working towards that easy life. It ain't going to be like that at the beginning. Your main focus is cash flow. So you've got to be looking at something that A, replenishes your pot, and B, allows you to generate cash. So this is what we were talking about earlier about the, what's the first strategy you should go for? Cash flow strategy. Yeah. HMOs, service accommodation, something that generates your money, running a business. And this is why I'm one of the few brokers, if I start speaking to somebody and they're like, oh yeah, I'm doing rent to rent, I'm like, awesome, brilliant. You're not doing rent to rent. It's not called rent to rent. It's called property management. That's what we're going to call it because that makes it sound more professional. You've got a company. You're learning how to manage property, which means you're generating cash flow, which then goes into buying property eventually, which you then already know how to manage. So as a rent-to-renter, you've got to be thinking about what you're trying to actually achieve. Ultimately, you're broadening your horizons within the property game. You're generating cash flow, which eventually will go towards buying that first BRR project or whatever it might be. But in the meantime, you're actually learning the game and you're creating a business and you're learning how to run business systems, which ultimately, to be a good property investor, you have to be a good business person as well.
Yeah, absolutely, 100%. You mentioned rent to rent there. So back to my earlier point about that linearity of, you have to start with a buy to let and then move across. People are saying, oh yeah, I'm going to start with rent to rent because I don't have a big enough deposit yet. But again, it's not the case though, is it?
Can we just talk about rent to rent a second? Only because we spoke about this on the phone a while ago. I remember this call. And a lot of newbies do this, is, lenders don't like guarantee. If you say guaranteed rent to a lender, they run a mile, which sounds weird because it's guaranteed rent. But it's a case of who's guaranteeing the rent. So if I'm the landlord, I'm the investor who owns the property, you're the lender, Sam is saying to me, Shaz, I'll guarantee your rent because I've got a contract with the local provider. I got no guaranteed rent. Sam has. What if me and Sam fall out? So lenders absolutely dislike having a middleman which is the rent to rent provider.
Somebody they can't necessarily do
because you've got nothing. You've got nothing. You've got no assets, no liabilities, and it's something that comes up a lot more often now because of the whole social housing stuff. If the contract is direct with the provider, with the charity or whatever, that's great. If you've got this middleman, they're not. It's not great. And lenders hate guaranteed rent.
Let's play a game.
You sound like Jigsaw.
You want to play a game?
Yeah, I'm really concerned now. Why is there a chainsaw in the corner?
Yeah, and the room's getting smaller all of a sudden.
So I made this up yesterday. Very original name. Property newbie, finance mythbusters. I'm going to read out a few statements, and you got to say whether you think it's a fact or fiction.
Okay.
Or, yeah. So, number one, you need a perfect credit score to qualify for a mortgage.
Fiction.
Absolute myth, yeah.
Oh, myth. Yeah.
Come on, you got to play the game, man. Come on.
Sorry, I was like, can we have a buzzer as well?
Play by the rules.
Yeah, I should have bought a buzzer. That'd have been cool.
I'm sure there's a
First
buzzer.
to buzz. First
Yeah.
to buzz.
Okay.
Private lenders always charge higher rates compared to traditional banks.
Oh.
Purple.
It used to be, but I think right now the difference is very minimal.
The amount of times that I've had the should I get a mortgage for this BRR purchase conversation with clients recently, and the bridge has worked out cheaper than the mortgage.
Oh, really?
Yeah, because particularly maybe not right this very second, but certainly like 3 or 4 months ago, when you factor in, and also this is another thing, just to go off on a minor tangent, when people are talking about annual interest versus actual costs, if you are working out a bridge and going, well, I'm paying 6% on a mortgage and a 2% and a 6% fee or something, then on a bridge I'm paying 1% a month, which is 12%. That's a 2% fee, so that's 14%. No, you're paying that back in. Like my average get out for my clients is 5 to 7 months.
Yeah.
Plus your exit fee on your mortgage with this mortgage fraud.
Yeah.
I think plus also on a mortgage, if we compare, say, Birmingham
And the
Midshire.
taxi to jail.
Yeah, Birmingham Midshires and TMW, traditional bank lenders or building societies, they used to be way cheaper before, but now their rates are similar. Say Kent Reliance's were specialist lenders, so I think it's a very minimal difference.
Yeah. Okay, let's rattle through a few more then. Refinancing your mortgage or property, will always save you money in the long run.
Depends.
If you're going onto an SVR rate and it's obviously going to be massive, then yeah. But yeah, you have to factor in fees and all this kind of other stuff as well. Sometimes, and the actual question on that is staying with the same lender versus going to a new lender and remortgage is probably the better question.
Product transfer, can you?
Product transfer, generally there are options that are fee free. You're not paying for valuation, you're not paying for legals, versus move to another lender, paying fee, paying valuation, potentially paying app fees nowadays, and just factoring all that in.
If you want to borrow additional, then look at other lenders. If you want to keep your balance the same, PT might be better.
This next one's interesting because a lot of my friends at the moment, we had a conversation about this recently. So, paying off your mortgage early is always a better financial move.
They've been watching TikTok way too much. I've seen all these American TikTokers going, double the payments, pay every 2 weeks, and suddenly you save millions of pounds in interest. It doesn't work in UK, does it?
Yeah.
Have you seen those videos on TikTok?
Yeah, well,
I've not seen them, but we were just talking about because a lot of my friends, they're not in the mentality of property investing and making money work for you. They just say, I just want to pay my mortgage off as early as possible.
I think there's 3 things to consider, which is firstly, are we talking residential versus buy-to-let? If it's residential, pay the bugger off because it's your biggest liability. Get that down. As a business owner, I want my overheads to be down. As a investor, your personal financial situation plays a role in your business. Therefore, get that down as quickly as you can. The more overpayments you make, the compounding effect of the less interest you will pay, and it will go down quicker. Absolutely. When we're looking at investment properties, personal name versus limited company, if it's in your personal name, pay that bugger off because you're not getting the benefit of having a mortgage apart from raising finance to help you buy something else. If it's a limited company, realistically, I'd say most investors have the long-term strategy that we're leveraging up whilst we're building. Once we're consolidating, just get it below 60% and then you're just accessing the best lending in the market.
Yeah. On the point about resi, when I was at Barclays many years ago, borrowing on your resi was the cheapest form of borrowing. You're looking at rate 3%, but now it's not.
Yeah.
So now it's the same rates. It's not actually effective.
You've got to. It's like anything. If you can borrow money for this amount over on the left hand side, and you can use that to make this amount on the left hand side, and that's 2% more, you're making a 2% net gain. Do it.
Okay, pick one more then. Two more actually. I want to end on a particular question which you'll find funny. We touched upon this a bit earlier actually. Renting is always throwing money away compared to owning a home.
Myth.
And then last one. I only need 1 year's property experience before I can start selling courses and mentoring people.
Less than that,
no, that's not a myth. Apparently you can because there are so many people doing it.
Yeah.
But do you know what? On a serious note with that, if that person has had a really good freaking 12 months and they know their shit and everything's up to date, then maybe what they're telling you is actually more relevant than someone
Yeah,
that did
how
it
active-
20 years ago.
How active have they been in that 12 months?
Yeah, the only thing I'd
Exactly.
say of that though, you got to have, you got to have gone through certain cycles in the market to know certain things.
Yeah,
Downturns,
especially
upturns,
service
everything.
accommodation.
Yeah,
You got to
just
go through the winter a
Yeah,
few
you got to
times.
go through the different seasons, and a landlord pulling the contract, and so. But yeah, that's a fair point. It is a fair point.
I think the somebody, if somebody's actually saying to me I'm running this course, I've been in property for 30 years. My first thought is not, oh, that's good. My first thought is, okay, and when did you last buy a property? What actual strategy are you doing right now? Are you sitting on a 200 property portfolio that you bought in the late 80s, early 90s, and you're absolutely rinsing it? Like everyone would love to be in that position, but it's not going to help somebody that wants to, do BRR. I know somebody who is selling mentorship / courses to teach BRR that has never taken a bridge out in their life. They just use residential mortgages, but they're teaching people how to use bridging.
Wow. We're not the mortgage police. Do what you want.
Wow.
Yeah.
You're all grown adults.
Like the LinkedIn police.
Yeah. But I think just what people shouldn't do about mortgage police is I don't want people to have the thing where they know it's wrong, but they want to ask other people on Instagram or Facebook to be like, this is okay, isn't it? Even though I know it's wrong. So don't try and validate bad behaviour.
And don't put it in the public domain as well, right?
But also, it's the I've gone to a professional that knows about mortgages and bridging finance and stuff. They give me X advice, but my mum said that I shouldn't do it. Yeah. Okay. What, your mum, the person that has never owned a property in their life, is giving you advice on mortgages?
Yeah.
Think about
Dave from the pub, right?
Yeah.
Oh, that bloody guy, Dave. Honestly,
It's Courtney on the football pitch, isn't it?
Dave's the equivalent of a Karen, apparently. That's why I said Dave. But yeah, guys, before we do wrap up though, what one single piece of advice that would you give to someone new looking to start, investing in property?
I would say get your ducks in a row. Be confident and clear on your strategy now and going forward, medium, long, short, and trust your broker.
I'd say don't be a professional researcher. Experience is worth double of what you're going to get in terms of on a course. Do your research, but there has to come a time when you've got to start taking action. Listen to people that know what they're doing as well and know what they're talking about. Listen to your advisors and find the best people to surround yourself with.
Love that. Well, gents, thank you very much for coming on. It's been an absolute pleasure.